Hello, everyone. My name is Monica Disrow. I'm a proud member of Gamma Kappa Omega chapter of Alpha Kappa Alpha Sorority Incorporated. Professionally, I am an accounting manager. I also do own my own accounting firm, I Am Accounting. My specialty is strategic finance, personal and corporate tax, as well as a notary signing service. During the month of April, Alpha Kappa Alpha Incorporated will focus on Target 3, Economic Excellence. During this time, I will bring you one of a four-part series on financial literacy. So be on the lookout for additional presentations published on Financial Fridays. So let's get started. Target 3 emphasizes financial planning, asset accumulation, and wealth building. Financial planning includes multiple finance subjects. The areas I will focus on are personal financial planning, budgeting, and preparing for an emergency by establishing a rainy day fund. Our first subject here is personal financial planning. Personal financial planning. Personal financial planning is a long-term plan. The plan lists out what we should focus on from the beginning of our careers on into retirement and then life after retirement. It's important to focus on budgeting, getting out of debt, saving now and on into the future, retirement planning, and insurance, especially life insurance. As you can see here, your financial journey begins early after your teens and ends well after retirement. There are 5 financial stages of your life. As you go through each of these different stages, your financial goals are likely to change. The 5 stages are post-secondary and early career, family and career building, pre-retirement, early retirement, and then on to later retirement years. We'll discuss the first stage. The first stage is post-secondary and early career years. During this stage of life, you're starting your career. You're spending a lot of your time earning income during this time. Some of your goals may be paying for your secondary education, buying a car or home, building your savings, paying off debt, and establishing and building a good credit history. This next stage is family and career building years. During this time, you'll experience growth in your career and your income typically is rising. You may start a family or begin saving for your child's education. The goals you'll focus on here is purchasing a larger house or new house, life insurance, reducing your taxes, growing your savings, preparing a will, opening a retirement savings plan, and you may also consider starting a new business. Each of these stages are very important. We'll now discuss your pre-retirement years. During these years, typically, your expenses are going down and you can start building your savings. The goals you may have are paying off a mortgage, paying off other debt, reducing your taxes again, growing your retirement savings, sending your kids to college, starting a new business or growing that business, and definitely planning for retirement. Now we're moving on into those early retirement years. At this point, you may begin working less and focusing on your health issues, if any arise. Some of the goals will include turning your retirement savings and pensions into income, managing your taxes, managing your savings so that they last, and making changes to your will and estate. This stage 5 comes when you're well within your retirement years. It's a stage that we definitely need to prepare for early on. During this stage, our goals may include optimizing our taxes, managing our savings to last, estate planning, and considering options even for assisted living. As discussed, our goals will change as we move through each of the financial stages of life. I've inserted here a financial goal calculator. This is a useful tool. It'll help you establish and adjust your financial goals as you move through these different stages. Remember, your goals can change, so make sure that you adjust your financial goals along the way. As you go through each of your stages of life, make sure that that financial plan is working for you and definitely helping you reach those goals. If you have any concerns along the way, make sure you reach out to a financial advisor. Now we'll discuss our second topic, budgeting. Budgeting. I call it the plan. A budget is a planning tool. It's your financial blueprint. Budgeting means that you're spending with purpose. At its simplest, a budget lists how much income you have coming in compared to what's going out each month. When you create a budget, you begin to see a clear picture of how much money you have, what you're spending it on, and how much, if any, is left over. Hopefully, you'll have a surplus left over, which you can use to save for retirement, build up an emergency fund, pay down debt, or apply to any other financial goal. The simplest way to create a budget can be on paper, but you can also use a spreadsheet or a budgeting app to get the job done. Now let's take a deep breath and dive in. Our first step in budgeting, or first method, can be a zero-based budget. Zero-based budgeting means each item in your budget has purpose. You may want to start with the most important items first. Some of those items or categories can be utilities, rent, car expenses, food and groceries. And always remember, each month is different. No January budget will be the same as a summer, July or August budget. The utilities can be completely different. When you make your budget, make certain that you stick to it. A budget only works if you have the discipline to stick to it. Also, within your budget, do not skip over paying off your debt. Definitely include this in your budget. It's a very important item. If you have any issues, don't be afraid to trim the fat. On our last slide was an Excel file. If you'd like this Excel file, I can definitely send it to you. It includes a great budgeting spreadsheet. The tips I can give you are to track your progress. If your progress shows that you're going to be off track, make sure you adjust your budget. Create a buffer in your budget. You may also call this a rainy day or an emergency fund. Whenever you can, if it helps you, use cash. Use some type of tool to help you stay on track. Include all of your goals within your budget. If you have a goal of going on vacation once a year, include that in your budget so that you can pay towards that goal over time. And last but not least, do not stress. Stressing is definitely not going to help you reach that goal. Now that we know, be prepared to make ongoing adjustments and use any and all tools available to you. Prepare your budget together as a family. When you can, refrain from using credit cards. Use them only in case of emergency. Your budget, it's unique only to you and your family situation. Do not compare your savings to anyone else. And as we all know, sometimes life happens, and adjust accordingly. If you have to, use an accountability partner. That'll definitely help. And if you have any questions, if you have any concerns that you feel are outside of your scope of knowledge, make sure that you call on an expert. Our final subject is a rainy day fund. We want to focus on how to build an emergency fund during an emergency. How to build an emergency fund in the middle of an emergency. There's no way around being impacted by the pandemic that we're all experiencing. COVID-19's impact on our finances cannot be ignored. Coronavirus has slowed our U.S. economy and disrupted many non-essential jobs. If you don't have a rainy day fund already, it's time to set aside whatever cash you can. Typically, an emergency fund is something saved gradually over time, but the crisis is here now, so a different approach is needed. Even a small cash even $250. So what can you do during an emergency? Well, let's take stock of all possible sources of cash and credit. The balances that you have available on those credit cards already in your wallet, you can use those to draw upon if you need. Sources of cash? Well, if you're expecting any sort of lump sum, whether it's an income tax refund or a stimulus check, set aside as much of it as you can. Discipline yourself to use the income and money available to you wisely. Next steps would be to scrutinize your spending and cut wherever you can. It may feel harsh, but belt tightening is the idea. If there's any subscriptions you can do without temporarily, you may want to cut those. You can switch to a less expensive cell phone plan for a few months. Any and all ways for you to tighten the belt, it's the time to do so. Take an aggressive approach and direct all your savings to your right now emergency fund. Some additional advice would be to consider temporarily reducing contributions to your retirement account and redirecting that money back into your paycheck and ultimately into your retirement fund. I would advise this in the short term because right now the situation is dire. Just make sure that you set a calendar reminder on your phone to resume contributions once the crisis passes. Other options would be a hardship withdrawal or loan from your retirement plan. But be mindful that loans aren't taxable and must be repaid. Hardship withdrawals don't have to be paid back, but they are definitely taxable. So be careful. And finally, an emergency fund is different from your typical savings. Your rainy day accounts are meant to be drawn down or used up. Once you have your savings cushion, do not feel bad about using the money if you need it. That's exactly what it's there for. Your emergency fund, your rainy day fund, you're not saving to create an account that you never touch. So with this presentation, we covered personal financial planning, budgeting, as well as an emergency fund established during an emergency. I definitely appreciate everyone's time, and please know that I am here to help you get through these tough financial times. If you have any questions on financial literacy or questions on any of the tips that I've shown, please reach out. Again, please stay tuned as I have more coming to you each week on our Financial Fridays all month long. Again, this is Monica Disrow with Gamma Kappa Omega chapter of Alpha Kappa Alpha Incorporated. Thank you.